Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So what we had was a situation where the market was ready for healthy consolidation, and it was delayed a little bit by Trump's tweets about China deals. Then on Friday, you have Kudlow and the advisors coming out and saying, well, we're not actually near a deal. And so then the price dumped. And if at this point you are not realizing how big of a game this is just a game with higher stakes where the numbers in your video game result in dollars that you can use in the real world. This is a game, everybody's playing it, a lot of people are playing it, and tweets move trillions of dollars. So what we have now is, in my opinion, Trump is trying to make the stock market look as strong as possible into the midterm elections, and that's logically makes sense with what he would want rather than panic and fear. But we're looking at the start of this consolidation that we knew was coming as we were looking for a lower high compared to 281.15. So anything under 281.15 is a lower high. We have started this 4-hour consolidation. And now the question is, where do the bulls form that higher low? We have a gap to fill down to 268.12, and I'm watching on the hourly time frame for a trend change back in favor of the bulls to let us know that our daily higher low has been established. So the size of the bounce, we ended up bouncing about $15, and that is plenty of space for the bulls to establish a higher low. We are done major tech sector earnings now. Apple had a bearish reaction. Trump's tweet held off the bears for a bit. But now we're looking towards the FOMC this Wednesday, and the financial sector is going to be in the spotlight. So if it's a bearish reaction to the FOMC, we're going to be headed back down into the mid to upper 260s. If it is a bullish reaction to the FOMC, we will likely form a brief little higher low and then see continuation. So FOMC is the big event to be watching this coming week. Weekly time frame is a bullish reversal candlestick. Bulls want to break the lower high pattern every week. We are seeing lower highs now for the last month, so bulls would love to break 275.23, which would mean that we do get this continuation move. IWM, anything under 158.86 is a lower high. The bulls are topping out a little bit after this bounce, so we look at the 4-hour time frame, and the hourly chart actually hasn't lost the uptrend yet, so we would have to see a break of 152.54 for the start of daily consolidation. And the 4-hour chart, we'll just be looking for a healthy higher low to form, watching the exponential moving averages here, the 12 and the 26 period. I use these for cryptocurrency trading, but I do keep an eye on them for stocks as well. And if we can hold that and see this bull cross here for the first time in a long time, that would be notable as well. It would be the first time in almost 2 months. So IWM probably going to be following what SPY does, but also keeping an eye out for any potential indications if we do get different action. But where the daily chart is set up, IWM is very similar to SPY. QQQ pulling back from the daily middle Bollinger Band resistance. There's a gap to fill here as well, 166.03. So again, I want to see the details. I look at the hourly time frame. I can see that the trend has shifted as we lost the higher lows. We have started to, let's see, did we start to enter that gap? We did just start to enter that gap, not much follow through right now. And the daily chart, we're going to look for a higher low to form compared to 160.09. And then the question is, after that higher low forms, can we see continuation? The less consolidation, the more likely for continuation because the bulls will have less ground to make up to get back to that resistance level. Weekly time frame, bullish reversal candlestick, same story. We want to see a break of 172.55, which would mean daily continuation and for this weekly bounce to get some follow through. Financial sector on spotlight this week. 27.18, anything under it's just a lower high. Consolidation started on Friday. We checked the hourly time frame. Lost the higher low pattern just barely, not significantly at this point. So it's still pretty healthy 4-hour consolidation. There's a gap here as well to be watching. And we're going to get this set up now. The first 2 trading days, Monday and Tuesday, we're going to be watching what does the consolidation look like? What does the market anticipate for Wednesday? The more consolidation, the more bearish the market will be anticipating Wednesday to be. And if the bulls hold up well, they will be within striking distance of potentially going after 27.18 resistance if it is a bullish reaction to the sector, to the FOMC. Weekly time frame for the financial sector, the bounce clearly has started already as we held a higher low compared to last week, and we check everybody else, and everybody else, aside from IWM, But SPY and QQQ, they dropped to lower lows. So the financial sector bounce started a little bit sooner, and in my opinion, that was in anticipation of the FOMC this coming week. So VIX, we got that bull move we were looking for. And if you look at the video from Thursday afternoon or Thursday evening, I said we're looking for a VIX bullish entry and a higher low to form on the daily chart. Then Friday morning rolls around and I completely forgot I said that. Fortunately, we have members in the chat room that were pointing out the volatility sector, and that reminded me, oh yeah, we had a really nice setup for a potential bullish entry opportunity. So I did trade TVIX on Friday, and we'll look at that short term before we look back at VIX. And it was a 5-minute little cup and handle pattern in terms of psychology that I was watching here with extended hours. So I was looking at key resistance from extended hours and then the high of the day. And I really like this setup. And honestly, I used Apple. Apple was driving the entire market for the first half hour to an hour of trading on Friday. And I used Apple to enter VIX. So I had VIX on one chart. I had Apple on the other. I saw this key resistance of 45.06 on TVIX. And that's the high of pre-market. So I then look at the high of the day, 45.09. I call that a double top. Now with a cup and handle pattern, the right side is supposed to be lower than the left side for psychological reasons. But if that's a double top and then we see a healthy bull flag of consolidation, I entered on this bull flag here on this candlestick. And then I said, all right, I'm going to use this stop level and 44.28. If that breaks, I will exit. The risk at that point was maybe, let's see, I got in the 44.80s. So I was risking about 60 cents to the downside. And obviously the reward potential was much more significant. So entered once I saw Apple weakness. I was watching the 5-minute time frame for Apple as it was coming to the low of the day. The bulls didn't do anything to show me a bounce was coming. And so I entered anticipating a new low of the day on Apple. And then 5 minutes later, we got that new low of the day on Apple, new low of the day on SPY, and the cup and handle breakout confirmed in a big way. And I definitely took profit too soon, but my game plan was to hit my target, lock in that profit, have a day maker, and be done with it for the week. And that has a strategy that I used all week. I took 1 day trade per week, went 5 for 5 every single day, locked in a day maker every day, and I'm going to start playing around with that strategy from now on. Obviously, had I held and stuck with the 5-minute uptrend as my guide for an exit, I would have stayed in that trade until either 47.50 if I had a really tight stop level, or all the way up here at 48, up here before we started pulling back. So that's a lesson that I take. And I say, all right, next time maybe I'll take half profit and then let half ride at break even and see how much upside we can get. So VIX on the daily time frame, equilibrium setting up, but we need to see trend change on the hourly to make us confident that that daily higher low has been established. So at this point, we saw a big bull move, no doubt about it. We broke a lot of resistances, but we have to see the higher low and then continuation to confirm this hourly trend change. So the size of this range right now is looking more like an hourly equilibrium is likely rather than just a continuation move. So we'll be watching for an hourly equilibrium. If the hourly equilibrium breaks bullish, we'll say, all right, our daily higher low is established. We're going to look for this range to continue to tighten into mid-November. But if that hourly equilibrium breaks bearish, we're not confident that our daily higher low has been established just yet. And the weekly time frame, I'm not interested in it because the daily time frame is so clear, much more detail, and it's all about the hourly time frame to start early this coming week. So I appreciate you watching. I hope you have a good rest of your weekend. Doing a lot of MJ videos. USMJ sector is going to be heating up in the near-term future and potentially the mid-term future. So that's what we're keeping an eye on as well. Put out that video earlier if you want to check it out. And we'll do commodities in a bit.